Welcome, everyone. Tonight's presentation with regards to is, knowing interest rates. We're in a higher interest rate environment. We haven't had these interest rates in over a decade. I want to hopefully all the homeowners out here that have joined us tonight. I want to help you invest in yourself and help you teach you some tips and tricks to help you pay off your mortgage faster. My name again is Carmelo Boutis. I'm a mortgage agent at Your Mortgage Your Way. I've been doing mortgages for over 20 years. I started my career a long time ago as a mortgage underwriter. For those who don't know the position of a mortgage underwriter, they're the people who review your applications that actually approve or decline a mortgage application for either purchasing a home, refinancing a home. If you're looking to move your mortgage from one lender to another, that's what a mortgage underwriter does. So the first thing I learned in my career is how the banks think when they review applications and what they look for to approve you. My experience goes way back. I worked for the big banks. I worked for the smaller alternative lenders. I got a vast experience with all different sorts of banks and lenders and profiles. And now I'm independent. As a mortgage agent, I work for you. I have access to over 59 different lenders. I have no loyalty to any of them. It's really who has the best rate and the best deals this week when it comes to qualifying you for your mortgage. I work for you. I don't work for the lender. So I shop around to making sure I get the best mortgage with the best terms, best rates for any transactions you're looking for. So to begin, when it comes to paying off your mortgage and paying it off faster, there are three ways of doing this. One option is changing your frequency. And frequency just means, are you paying your mortgage monthly? Are you paying your mortgage semi-monthly, which means like twice a month? Are you paying your mortgage bi-weekly, which means every other week? Or are you paying off your mortgage weekly, which means you're paying it off, making a payment every week? Another option when it comes to paying off your mortgage faster is increasing your payment. Every bank I work with gives you an option to, increase your payment. Every bank I've worked with, I notice, always has a little difference with regards to how much they allow to increase your payments and or put a lump sum on your mortgage, which is the third way of paying off your mortgage faster, which is, every year, throughout the year, taking some extra money and putting it on your mortgage. So, Alex, I got a quiz for you tonight. I hope your mic's gonna be working.
Yeah, it's all good
now. True or false? If you change your monthly payments to biweekly, will you save tens of thousands of dollars in the first 5 years of your mortgage?
So, I think it's false, just because, tens of thousands of dollars in the first 5 years of your mortgage, that sounds like a lot of money. And are you asking like off the principal or interest, or just like in general?
Off the principal.
I doubt it. So I think it's false.
Okay, that is correct. I hear it a lot. You know what I mean? People change their payment frequency to bi-weekly, and I know the media, and when you go online, you see a lot of things when it comes to saving like tens of thousands. That usually means over the course of the life of the mortgage, the amortization of 25 years.
Yeah, I remember thinking that too, because I switched my mortgage frequency to weekly, and it showed like it looked like I was going to be paying less for cash flow, but I guess at the end, like it's pretty much the same at the end of the year, right?
Well, hopefully at the end of this, because I do have a question when you say weekly, because there are differences.
Okay.
So for tonight's example, I'm going to use a generic mortgage. It really doesn't matter the mortgage amount, but I'm going to use $500,000. Again, when it comes to paying off your mortgage faster, it really doesn't even matter what your interest rate is. But for tonight, I'm going to use the example of the interest rate is going to be 5.25%. And the mortgage, when it began, it's beginning with a 25-year amortization. Right? So with this example, if your payments are monthly, you have a monthly payment of $2,980. Right? Over the course of 5 years, you're paying down $55,743 worth of principal, $123,000 worth of interest. So then over the total of the 5 years, you're going to be paying $178,000, which is pretty, ugly when you think of it at the beginning. But when you get a mortgage, the way it's calculated, it's amortized, and usually the interest is paid at the beginning, not at the end.
Yeah, that's a lot. That's like almost 3-to-1 interest to principal.
But this is actually quite normal. It really doesn't matter. Even when you have a change in interest rate was lower or higher, you look at an amortization schedule, all the interest is usually paid at the beginning.
Mm-hmm.
And at the end, regardless of the interest rate, the last 5 years, you're paying all principal. So the difference is when you're changing your frequency, there are differences when you go to biweekly. A lot of people say, I want to change my payments to biweekly, which just means you change it to biweekly. When you change it to biweekly, you're really keeping that monthly payment. Mm-hmm. What the banks do is they multiply that by 12, then they divide it by 26, because you're changing it to biweekly. Mm-hmm. Doing that really doesn't give you any savings, because the amount of payment you're making in the course of the 12 months is the same.
Right.
So when you change the payment from monthly to biweekly, Alex, there are savings. You only really save $208 over the course of 5 years.
That's crazy. That's not even like, that's not absolutely. That's less than nothing almost.
Yeah, on a $500,000 mortgage, yeah, it really is nothing.
Yeah.
The savings happens. This is where when you talk to banks, this is where I come in. I can help you with is understanding the difference, because you could change your payments to biweekly, but then there's changing your payments to biweekly accelerated. What that means is it's accelerated means you're paying off your mortgage faster. It takes that monthly payment, $2,980, and it divides it by 2. Okay. So it cuts it down to $1,490. Now, okay. There's not 48 biweekly periods in a year. There's 52 weeks in a year, not 48. Mm-hmm. So effectively, when you do something like this, you're technically making 13 monthly payments. You're increasing your payments. But most people I work with, and I work for someone, they usually get paid biweekly. And that's the most common and the best thing to do. When you have a mortgage, whichever day of the week your payments are made, Monday to Friday, have your payments come out the same as your pay cycle. So if you get paid biweekly, you're getting paid 26 times a year. So it makes sense to take that monthly payment divided by 2 to match your pay cycle.
Right.
By doing something as small as this really quickly, what it does is saves you $2,328.
Okay.
In 5 years.
Okay, it's going in the right direction.
Yeah. So now that's one thing that it does. The second thing that it does, Alex, is the length of time to pay off your mortgage. It goes from 25 years it down to 21 years at 5 months. Automatically, that simple change that you do with the mortgage payment takes off 3 years and 7 months in the length of time to pay off your mortgage.
It also looks like the principal jumped too, right? Because I think it wasn't at 52,000 in the last example, and now it's at 72,000, 55.
The payments, yeah,
the principal paid. So not only you saved $2,000, but you also paid an extra, $18,000 towards the actual value of the home.
Exactly. That's building the equity, and that's because you're increasing your payments. That increase in payments, is what the difference is. So, Alex, you mentioned your payments are weekly. Mm-hmm. The question is, do you know if you're weekly accelerated or non-accelerated?
No, I'm not smart enough. It's they're just weekly.
So we have
to having the smaller amount of money come out of my account.
But that's okay, right? Because as long as you're aware with it and you're okay with it, there's nothing wrong with that, right? So the key thing is that the knowledge and being aware of it, because it makes big, that small changing the payment frequency to match your pay, mm-hmm. and then at the same time having to come out, coming out, it saves you, a couple $1,000. And the key thing is, if you're not paying a payment of $1,490 for another 3 years and 7 months, how much saving is that at the end, having that extra money in your bank account?
Yeah, I mean, that's like almost a term.
That's almost a term. And look at what the terms are. Look at the payments over the course of the term. In this
Yeah.
case, 193,000.
Yeah.
So
Very
that was a little bit of a trick question, everyone, and for you too, Alex.
Thanks.
So when you change your payments from monthly to biweekly, the savings is only a few dollars. It's really the increase in your payments when you change your payments from monthly to biweekly accelerated that helps you pay off your mortgage faster.
Nice.
That's the real thing. So the results, when you do that, it helps you save $2,328 over the course of the 5 years, and helps you pay off your mortgage 3 years and 7 months faster.
And also an extra like $15,000 goes towards principal.
Yes. So next one, Alex, true or false? When you increase your mortgage payments, every dollar you increase goes, every dollar you increase your payment by will all go towards your principal. Remember,
Based on what we just saw. Sorry, go ahead. Remember what?
remember, when you make a payment, your payment is principal and interest. So when you increase your payments, question is, every dollar you increase your payment will go towards principal.
Yeah, because the interest rate's the same.
Correct.
So yeah.
So true.
Sorry, correct. Yeah, true. Yeah, exactly.
For every dollar you increase your payment,
Yeah.
all of that goes towards the principal, paying off your principal of your mortgage. The side effect is also at the same time, it reduces your amortization and saves you interest in the long term.
Nice.
So we're going to continue, Alex, with the same example, the same $500,000. Now, I want to break it down to like two different things. The first option, we had the payments biweekly accelerated, where your payments came out to $1,490 biweekly. One tip I always do is I personally can never memorize a number like that. So what you could do is you could just increase your payments by this. For this example, is as little as $10. Because I could remember every 2 weeks I need $1,500 in my bank account. Over time, I'm going to forget. Oh, I'm going to say to myself it's $1,500, but really it's less. Best thing is to do is to just increase it to an even number, to the nearest 100. That's the number you're always going to remember.
Yeah.
And that extra little $10 all goes towards principal. So for this example, if you just increase your payments by a little as $10, it helps save you an extra $182. Now, the savings is it may not seem much, but it also reduces the amortization by another 4 months.
Nice.
So it helps you pay off the mortgage faster. And that little extra, every little bit counts. If you do have access to, extra money based on your pay, and let's say you get a pay raise, let's just say you increase your payments to $1,600. Now we're talking even more savings. Because now that extra $110 is going towards principal, and that'll save you an additional $2,007 just for that change.
Right. So it's like making the change and just optimizing it, and then just, kind of set it and forget it. Because like $100 every 2 weeks, like it's very easy to, forget about a number like that, but it makes a difference here. Like you shaved off like 7 years off your mortgage almost.
Well, yeah. What it does in total is going to reduce your amortization with the two changes to reduce it by 6 years and 1 month. But the key thing is, Alex, again, like you said, like it's not that much of a change. If the payments are made the same day as your payroll comes in, you get paid. That extra $100 going out, you don't really see it. You don't notice it because you're only going to be spending what's remaining.
Yep.
And therefore, it's not going to really change your lifestyle. Now, whether you go as little as $10, nothing wrong with that. You could go as big as $110. With all the banks I work with, and every bank out there, they all have favorable options. Every bank is a little different. I've seen the options of increasing your payments by as little as 10%. A majority of them allow 15%. And a bunch of them also allow you to increase your payments by 20% of your original amount. So and for this example, if your payment started at $1,490, you could pretty much increase your payments by almost $300.
Nice.
There's a lot of room. That a lot of people want. I talk to and I work with. They're like, "Oh, Carmelo, I'm going to do the maximum right away." It's like we got to take it. Sometimes it's always good to take it in steps, right? $300 every 2 weeks would hurt my bank account. $10 or $110 is something I probably wouldn't notice as much.
Nice. It's a great tip and like very sustainable and easy to implement, and it doesn't take much effort at all, but it makes such a difference.
It doesn't take much effort at all, and it makes a huge difference. So I want to kind of show, even a small increase of $10 biweekly, how the savings works. It adds $82 just for making that change. But when you add that to the previous change of making your payments biweekly accelerated, now in total, you're saving $2,510. And on top of that, you don't have to make any more payments for 3 years and 11 months because that's how much faster you're going to pay off your mortgage. That's where the huge savings comes in. When you hear these things in the media and saving tens of thousands of dollars. At the beginning, it starts off small.
Mm-hmm.
If you increase it by 110, that's the savings get a lot bigger, right? Now you're saving an extra $2,007 over the course of 5 years, and when you add that to the $2,300 before, you're saving over $4,300 in just the 5 years of interest. The key thing is now you're knocked off 6 years and 1 month off your mortgage.
Nice. Yeah, excellent. It's like small sustainable change, kind of like, like what little 1% increases every day. And then when you look back at it, it's huge. Makes a huge difference, but you're not killing yourself doing it.
Exactly. Especially, so now the last one, Alex, is making a lump sum.
Okay.
True or false? When you make a lump sum payment on your mortgage, a portion of that payment goes towards interest.
Okay, so I'm assuming no, but also, is it capped? Like, actually, when can I make a lump sum payment? But I'm pretty sure the answer is false.
Okay, so
it shouldn't make a difference between making a lump sum or increasing your payment.
Correct.
False. Okay, cool.
It is false. So anytime you want to make a lump sum on your mortgage, every single dollar goes towards principal. Now, the difference with every bank that's out there, every bank has their own way of doing it. A bunch of banks allow you to make multiple lump sums in the course of a year. Okay. Some banks go based on calendar year, meaning January to December. Other banks go based on calendar year, based on the time you're a new customer with them. Okay. The key thing is with all the banks I work with, they all offer this option. Whether it's you're putting 50, we're allowed you to put up as little as 15%. Well, it starts off at 15% of your original mortgage balance. So if your mortgage balance started at $500,000, it allows you to put a lump sum of $75,000 every year. And some banks offer 20% lump sum on the principal, which would be $100,000 every year.
Do you have an example of what that looks like?
I want to keep it simple. I do, Alex. Again, making a lump sum. Again, I've learned, in my 20 plus years, I've only met one person who's only able to do it once, never 2 years in a row. Because again, we're talking with, $75,000, $100,000, that's a lot of money.
Okay, but what if my lump sum is $5,000?
Well, I'm using the example tonight, $1,000.
Okay.
Again, $1,000 is something where it could be the bonus you receive from your employer every year, or a tax refund. Something, again, it's manageable, right? But if you're getting an inheritance or a super large lump sum, like you want a scratch ticket, $25,000, $50,000, that's a different story, right? I want to work with something that I do that kind of works for me, and it works for other people. The people I work with, I share these ideas.
Okay.
Again, we have to go with the two examples. One where you just increase your payments by $10. If for the 5 years, if you just made a lump sum of an extra $1,000 per year, it helps you save an extra $743 over the course of the term. At the same,
So if
sorry,
wait, so
at the same time, Alex, it also helps you pay off your mortgage faster, a total of 4 years and 9 months faster.
okay, wait. So if I made one time, or is this every year I'm doing $1,000?
$1,000 every year for 5 years.
Okay, so if I paid $1,000 every year for 5 years, I'm gonna pay off over that amount towards the principal because it says extra principal 6,300. Is that right?
Yeah. So in total, this extra payment is the $1,000 every year,
Yeah.
plus when you add the $10 on every payment.
Oh, okay.
Right.
Okay.
I know
Okay.
it doesn't. It doesn't. When you look at it, it doesn't add up. But again, these are all the extra payments. The extra payment of increasing your payments as little as $10.
Okay, so if I increase my payments $10 every 2 weeks, and I pay an extra $1,000 a year, I've paid down an extra $6,300 in principal. I've saved $743 on my interest, and I have also shortened my mortgage by 4 years and 9 months.
So, Alex, I get very close. I set this up where with the screen. This extra savings is only for the lump sum. This is going to be above and beyond the savings you made when you put the extra $10 that I showed you before. The extra savings from going monthly to biweekly accelerated.
Right.
So this, in the course of 5 years, when you put the lump sum of an extra $1,000, it'll help you save an extra $743 above and beyond the previous savings you did for the previous changes.
Nice.
So I don't want it's not for just that. That's the only, when you do all of them, that's your savings. Though it's in addition. And also want to share the example. Like, let's just say you increase your payments by $110.
Oh wow. Yeah.
Saving,
so you put down almost $20,000 in extra principal.
Savings just it kind of blows up. You're paying off the principal so much faster.
And you shaved off almost 7 years off your mortgage.
Yes. You notice that right away at the bottom.
That's like almost a third, over a third. Sorry,
that is again, considering the amount of payments you're making in the course of a term is 200. Let's call it 213,000. That's over 5 years. Not having to make mortgage payments 6 years and 10 months. That's going to be a lot of money.
Yeah.
Right. So again, the results are if you change your mortgage payment to biweekly accelerated, increase your payments by as little as $10, and you make a lump sum of $1,000 every year, you'll save a total of $3,253 over the 5 years. You pay the mortgage off 4 years, 9 months faster. And these are the small changes. If you could make them a little larger, have that biweekly payment increase by 110, you're saving almost over $6,900 over the course of 5 years, and you're saving off 6 years and 10 months off to pay off the mortgage faster.
Nice.
That lump sum, Alex, you mentioned if you want to, increase it to 5,000, it's exponential.
Yeah.
Now we're talking. I don't know what the number would be, but it wouldn't be 6 years. It would maybe 7 or 8 or 9 years.
Nice.
And that's where again, the example I want to show tonight is the small changes, because I want to, this is what I kind of help everybody I work with, especially the first-time buyers, and even those who upsize. I give these same tricks. Those who follow it and do these little things see these benefits right away. So the conclusion is really, when it comes to paying off your mortgage faster, keep it simple. It's the small changes you make that add up over time. And every dollar you save is a dollar earned.
So if I want to make these changes, do I need to call the lender, or is it just like I just do it on the website, or how do I do it?
Call your bank. A lot of banks that have access to an online portal allows you to make the changes online. And it's very simple to do.
Nice.
Right now it's time. It's like, I want to open up to the audience and those who've joined us tonight to kind of listen to see if there's any questions that they have.